So, good afternoon, my fellow trading friends. I hope you have been very profitable during the last days. It doesn't matter if you are bearish or you are bullish, because in this community we all are friends. Of course, in the chats we can see sometimes we make fun and debating ideas with each other, but I think this is a very productive process, as it is motivating us to be better, to improve every day, to check everything what we announce again and again and again and again, because we all know that as traders we are dealing with risk every day, every day, every day. And as trader, you know that you are always probing for a change in the market. In a downtrend, if you are bearish, you take a trade in anticipation of a new uptrend developing. Of course, you don't want it because you want that your bearish trend continues. If you are bullish, if you are long and you have bought Bitcoin, for example, the same, then you are trading in anticipation for a new new short trade or bearish trend, because you don't like it. You want that the prices go higher and higher and higher and higher. But the reality is that without bears, the market does not exist. And without bulls, the market does not exist. If you are in a bullish trend, bears are always present. If you are in a bearish trend, bulls are always present. Otherwise, we would not have any volatility. That's the mother of every move of the market. For instance, we have trends or silent days. The volume is very low. We have a narrow range. The narrow range is called also cattle, and the cattle or a bracket is another term for that. Consolidation is the difference between the low of the day and the high of the day, and that is changing. And a healthy trend is a trend that has a certain amount of volatility. So you can bet if you find such market, you can make over 80, 100 profit for over time, and you will be very lucky. And on the other side, we have volatile markets, like currently the situation in Bitcoin. And our job, your job as trader, is nothing else. As long as you are out of the market, your risk is zero, but your profit potential is also zero, because you don't earn your money or you make nothing. As long as you, or as soon as you enter the market, you are from the first second in risk. It doesn't matter if the market goes for you, if your account balance is green, your trade is green, or it's red temporarily, I hope. So important is that you are on the right side of the market, and to make that, we must make our brain and our mind relax and free of every noise. There are a lot of voices around us that are surrounding us, but news, but hypes, everything. But the only thing that matters is the price, right? Okay, that's first of all. So I hope during this time, all of you have been very, very profitable, and you have very big smiles on your faces. It doesn't matter if you are bullish or bearish, because especially during the last weeks, this market, if I want to be honest, has been enriching both of us, the bulls and the bears. I am a short seller. I am bearish, but I'm really sure that the bulls had their chances and a lot of fun too, and I hope that this party gonna continue. Now it's becoming a little bit serious, as we can see the price of the Bitcoin after the narrow range of last night, the Asia Open. We see here the range is very, very tight after the trend down of the market. And of course, in such situations, the one or other trader is going to plan and betting against the downtrend to buy the dip. So I want to warn these people, but as a trader friend, as one of you, one member of this very privileged society. So my advice is, before you take, if you are bullish, before you take any dip, for example, we see here the most people in the chat were talking about taking dips. I hope they haven't do that, because we see now later on the market dropped and is dropping very, very heavily. But I can reveal a secret. In the days where we have such very narrow period of the market, if you are trading with the trend, it matters on which time frame you are trading. If you are on a day trade, it doesn't matter what you can see here, because we are on 30-second chart. But if you are a day trader, go with the trend of higher time frames, but put your stops and manage your trades on low time frames. And you should be aware of these narrow day ranges and just wait for healthy breakout and confirmation, right? So why this happened now, this very big drop down? I was mentioning in my last two videos. If you want to see them, please watch them, because I have been telling them what is expecting us, and the price of today we see is the result of the circumstances what were happening the last days and the last weeks and months. So again, the future is the proof of the past, and the market is generally trading what is or what might or can be in the future. So the market trades on one side, bets or is betting on uncertainty. On the other side, the market is betting on some probabilities, what they could or possibly potentially can recognize, project, forecast, you can name it, right? And the reason that we came down during the last days was, or the data that has been releasing today, not only the non-farm payroll, much more importantly, the core CPI data. The core CPI data is a change in the price of goods and services that are purchased by consumers, excluding food and energy, but other products. That's very important measure that is showing, for example, if there is any change in inflation, or is the inflation going down, or is the inflation coming up. And the number was expected at around 0.3, but the number has been released it at 0.4 higher. So that's again a sign that the economy is heating up, meaning inflation is rising. Then we had today again the CPI. So core CPI is much more important than the CPI. So CPI is the little brother of CPI, of core CPI, and then we have the little sister that's called CPI Y. And CPI is also is looking only in change in the change of the price for good or of goods and services, meaning the price of a Big Mac, for example, last year was about $4. Now, after 1 year, that price has been risen to $5. That means for the same Big Mac, you must pay $1 more. With other words, money has becoming more important, not only important, but more expensive. And a lot of people have been speculating about the rate cuts. And now I think this discussion is slowly out of the table. Why? Because the numbers we have here that are projecting and mirroring that the inflation is going up is on one side also good for economy. For example, for the US dollar is becoming more expensive. The value of the US dollar versus or against all other currencies is going higher. Meaning now, if the United States, for example, is trading with another country, the other country for the imports, for example, of Italy, if Italian people or government of Italy is importing US American cars, machines, foods, clothes, whatever, they must change their currency, that is euro, into US dollar to pay the companies, the US companies they are negotiating or working with. And that means now, last year, for example, they had a trade balance of, let's say, $1 billion. At that point, the US dollar was, compared to today, cheaper, meaning they could, for example, import, let's say, 1,000 bulldozers to Italy, right? Just an example. And now they need still 1,000 bulldozers, but because the value of the US dollar is going higher, because the inflation is going higher, and the interest rates will rise higher, so the Italians have to pay, for example, now $2 billion. For the same product, they need to pay more dollars. So that means now the companies in the US are becoming richer, right? So this is, for example, it's just a simple example. Macroeconomically seen, there are a lot of factors. We have, for example, the treasury bond auctions that will come today at about 7 o'clock. Very, very important for the US treasuries yields, and not only for them, but also for foreign countries like China, like Japan, which are the biggest buyers and holders of the US treasury bonds. But that's another discussion. So in this case, we see that now the probability, the odds or the edge that the US dollar is becoming much more expensive, that it's becoming much more valuable. It is valuable, but the value, not only the price does not mirror or project the value. Oil, crude oil, right? Even countries rather than the United States that are producing oil, for example, Russia, Iran, Kuwait, African countries, Saudi Arabia, Venezuela, you name them, they must exchange the oil, or the price of oil is converted in the so-called petrodollar, and petrodollar will be converted in the US dollar. That will give another push for the US dollar, right? So that means the US dollar is something which is very valuable. It's like gold. It's not gold, but it's like gold, right? You can find many examples. So we need always to see the value. Now back to Bitcoin. We see that Bitcoin in this case is traded against the US dollar. Therefore we say BTC US dollar. Of course, we have also Bitcoin markets, crypto markets. They are trading against Japanese yen, then British pound sterling, Swiss franc, euro, and so on. So, but in this case, we see that the price for Bitcoin is coming down, meaning that the value, the trust in Bitcoin is becoming less if you compare that to the US dollar, right? This is the first reason, economically see. That means people ask themselves now twice to say, okay, in the coming week, after the 15th of April, for example, in the United States, people must have been paying their taxes, and the government accepting almost or often the US dollar, right? Not the Mexican peso, not the euro, not the Japanese yen. They say, okay, pay your bills, but in US dollar, please. So that means now, I've been reading that also some are selling now Bitcoins, not only people, smart people, but we are talking about very big companies, not only those that have been sanctioned by the SEC, but also a lot of companies that are holding Bitcoins. They are going to sell massively their Bitcoins because they must, in any case, pay their bills and also the taxes, or maybe the taxes they have not been paying, right? So this is the background. It's not done. Today at 8 o'clock, we have FOMC meeting minutes. It's not an FOMC meeting, it's meeting minutes. It takes just some minutes. Someone, or maybe Powell, is talking, but at the end of after some minutes, the comments after this meeting are very, very important in this FOMC meeting week, weeks. Then tomorrow, it's becoming much more interesting. We have then the big brother of CPI. His name is Core PPI, the Producers Price Index. And estimated is the number at around 0.2. If it's greater, and I don't want bet, I don't hope, but I think it will be bigger, or a minimum at expectation. Both are not good for Nasdaq, for Bitcoin and other currencies and stock market. The Producer Price Index is displaying the future of the companies. We see now, for example, that Nvidia, right? If I want to go back, we see here at Nvidia, this is at 30-minute chart time frame, and if we go then to a higher time frame, we see here the big drop of the last week. That's now that uptrend in bearish trend I was talking about at the beginning of this video. So that these sellers here, you see here, all the sellers have been selling here, or maybe higher Nvidia. They are anticipating with this short-term bearish trend, that's a correction. Some buyers are taking rapidly now profits, and some who have been buying higher are taking the losses. They are waiting for a good situation. Maybe they start to sell also Nvidia. Nvidia, for example, is awaiting the earnings, Nvidia and some other companies have very big weight in Nasdaq, and this is the tech sector. And the tech sector is holding a lot of Bitcoins. And the earnings for Nvidia, which has been driven Nasdaq to the all-time highs alone, this stock, are not looking too good, right? A lot of people now, and I'm talking about traders, are saying or waiting that the earnings for Nvidia will look very, very negative, very deep in red, below all the estimations. For example, Google, who is one of biggest clients of Nvidia, is now saying in the future we're gonna make our own AI and chips because the price of Nvidia is very high, expensive to us, and we are not going to accept it. So Nvidia is giving you the chips, but they say, okay, you wanted this, then you must pay this price, but we tell you. That's the deal, right? That's the capitalism. So, and therefore, Nvidia currently at around 853. I'm expecting it will go a little bit higher before the earnings, at around 900 to 1,000, something that range, before it starts to fall again. And there I am waiting for this market to short massively. So the third reason is the bond auction. The treasuries are the blood of the government, of the financial sector of the US government, because they are refinancing themselves. The higher the prices, the better is the US government refinancing his own trade deficit, for example, or refinancing his own debt, right? So the reason of today's drop is at this point the trade plan is clear. We stay short. We are now in the second phase of our short selling trade plan. I have been mentioning that in the last two videos, the trade plan of 8th of April and 9th of April, and also in the other 5 or 6 videos before I did those two videos. So step by step built up the scenario why we are here today, where we have been talking last days or last week. So, and now you can start to make maybe your own trade plan. If you are unsure, then I have a good recommendation. Stay out of the market before you risk to lose something. Stay out of the market. We always have bearish phases. We always have bullish phases. Analyze the market this time, if possible, without emotions, objectively, and very, very logical. Logical means if you are, for example, in a bearish position, you say, oh, it's going to 40K, then I make, let's say, $500 million. Or if you are bullish and you tell yourself it will go to $200 million, I will buy my Lambo tomorrow, then you are in an emotional state. That means your brain is not planning that trade logically, because your emotion or emotions are in front of you. This is, for example, the greediness. If you are somebody say, yes, I am bullish, but I was thinking it can go down, it will go down, and if I'm looking at my charts, I see it's going down, but my feeling is telling that the market will go up. In this case, you are in the fear state, not the fear to enter the market. If you are in profit, your fear is at this moment, the profits you have been making, I hope a lot of, millions, billions of dollars, you deserve it. Then your fear is, if I take this profit, it can go up, and then, for example, you are now making $1 million in profit, right? And you say, okay, if I'm taking out, maybe it can go up and I can make $100 million. Then in this case, you are greedy and in fear state. You are fearful to take that profit, to protect that profit you have already, or you could have soon, and you're going into a risk state, but that's not based on logical points or what the market tells you, and your arguments are full of emotions. And in this kind, then start thinking again, what will happen if the market comes so much down that from those $1 billion you have profits now at your account, at the end, if lucky, you can have maybe $1,000 or $100. In worst case, your beginning capital, 50% is loss. In very worst case, 90% of that. And I don't want to make that black scenario, okay? Not to go deeper, but I hope you understood what I'm meaning. So, therefore, every trader is willing and his goal is to make money. And even very big traders who are dealing with millions and billions of dollars, they are not making those billions and millions of dollars in one day. I know, for example, a lot of traders, one is managing above $900 million, and he has also losses, but his profit margin is some $1,000 per day. But over the years and over time, he has been generating those profits again and again. He has been some losing days or some losing months here and there, but every month, at the end of the month again, he was profitable. So we all are making losses, we are all making also profits, right? Keep this in mind and use your trades wisely instead of being more intense in the market. Wait your time, make your setups, and wait until the price comes to you. Do not hunt the price. If you say price is running away of you, do not run after the price. The price will come back again to you, right? Wait your time, have patience, and use only those highly quality trades that have been working for you in the past best, and try to improve only those setups, okay? So I wish you having a very profitable day today too, and also this week. And thank you very much for your time to watch my videos, to support. I appreciate it all. And also thank you very much for your great and very positive energy. Have a great day.